host, Joe Baker. Apologize for last evening's video. I did have one all prepared. I did go over a few trade setups, and I just took too long doing that when I went to upload the video. It informed me the file was too large, so I do apologize for that. I'm going to go over a brief setup, something that we do, or personally I do, and we use these in the room. We call it our trades. As you see this yellow dot, this is a caution dot right here. Okay, go ahead and snap a line right on here. Okay, now that is what we call our DMI ratio, and I know a lot of you are familiar with the DMIs. That's the squiggly line thing that looks like a bunch of crazy lines. What we've done is we've made a ratio of that, and it gives us a warning dot when they're going to cross to the downside, and that actually coincided again with our exponential moving averages. And on the right side of the screen you can have these print the value, which is great because I think the naked eye is very tough to see the actual level of the moving average, and we always say, oh, don't ever short a rising moving average, or a rising 34 is what this moving average is, and this is the 200, and you can see the 200 goes from up to this is a darker color, it goes to neutral, and then obviously to red. Now when these cross, some consider that what they call the death cross, and it actually signals cross under here at 1025 at 1292.50, and this trade ultimately went all the way down to 1277. Again, I just want to go over with you what moves markets. This is another indicator we have. This is called our trend friend, and this gives us based on histogram height how much this market can move down. And as you see, it gets very, very low, and we make a joke about this in the room that when the trend friend runs out of friends, it's time to at least peel off your long, or peel off the short or get long. But I do want to talk about a little bit more about, again, how markets move, and I'll try to be brief as I can. You have to understand that in futures you have to be let in because it's always equal. So no matter how many contracts long are the same amount short. That's what a zero-sum market is. This is where you see today, and I thought this was especially important on a day like today because of what happened in the oil markets. As you saw, oil at one point was up $25. Okay, now that was on this this current contract. Next contract, I think it moved about 4 or 5. Okay, so you have to understand that the shorts got squeezed and there was no sellers, okay, to transfer the contract out, to let them out of that market. The price had to keep auctioning higher and higher and higher and higher and higher till somebody let these guys out. And the same thing happens in futures. So what's important in a futures market isn't that there's a enormous amount of short interest like a stock, okay? It's where, okay, at what price is everybody short or long, or a majority of the volume have taken place. Underneath that area, okay, there's going to be some liquidation to the downside because people are going to be in losing trades and they're going to be liquidating out of their positions. Same to the upside. The shorties will get squeezed and they will push the market higher, trying to get into the market, trying to get that buy covered, okay, or that sell covered. And then the same thing to the downside, they're going to try to get that sell out, okay, and the shorts are going to hold it, okay. So it's almost, if you can imagine, it's a locked door, okay. It's a locked door. You cannot get in that market. And this is what makes markets move. This is why I stress when futures, you usually get in and say, oh, it can't go down anymore. It can. It doesn't matter. It's where they are, okay? And that's what's most important. So what we have is what we call our volume trend lines. And when our volume trend lines turn green, that puts shorty in trouble, okay? And we know they're going to be in trouble because we know that this is where the volume is. So we know that here they're going to be in trouble. Anything above this price is going to put the shorts, okay, in a little bit of a squeeze, and they're going to have to buy to cover an auction higher. Now, once it gets underneath, okay, that's when we know the longs are in trouble and they're going to have to liquidate. All right. Then we have what we call our resettable, and this resets during the high volume periods of the day. All right, and it's basically the session contract. Okay, and then we have what we call our overnight contract. So we can track both lines. They do sometimes line right up, sometimes they are way far apart. Here it is here. We had some big volume come in this market, so we were here at 1293, and then it reset down to 1284. So you can see all this volume down in here had a lot of contract turnover. We got underneath it, we reliquidated, and then we got above it, and that's when the market started to head up back up. Just want to talk about zero-sum markets for a little bit, just because the nature of this market and the way it is. I want you to understand why this market is continuing to make the broad ranges that it has. Is because a lot of people obviously are buying these dips and they're getting reliquidated. So as the market's coming down, we run out of sellers, and then the buyers come in, and then they become the new sellers. Okay, so I just want you to be very, very careful, guys. Please put these hard stops in there so that they're there ahead of time, so you guys are the ones getting tapped out and you're not chasing the market. Okay, I'll do more videos like this in the future. You know, I only have 10 minutes, so let's get over to the levels real quick. Okay, line in the sand, 1217.50, breakout, 1221 and a quarter, 1226, 1230, 1234, 1238, 1242.50. Underneath 1217.50, it's 1212, 1204.75 breakdown, 1275. That should be a pretty good level, guys. There, 1296.50. That's another real strong level. 1292 and a quarter and 1187. I'm sorry, 1192 and a quarter and 1196.50 and 1187.75 is our ultimate target to the downside. Again, guys, you know you can get all these levels emailed to you. Please just sign up. You'll just get this sent right out to you. I also am going to be doing some midday updates, which I think are very important, especially with this market volatility. So expect the midday updates to be coming out as well. Okay, guys, take care, and I will talk to you soon.